Welcome to the Buy Box Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the Buy Box Experts podcast. I'm a partner with Buy Box Experts and the former business head of the Selling on Amazon team at Amazon, as well as Amazon's first Fulfillment by Amazon account manager. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by Buy Box Experts. Buy Box Experts takes ambitious brands and makes them unbeatable. When you hire Buy Box Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. We also help investors with due diligence services. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I want to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month after month. Check out disruptiveadvertising.com to learn more. Our guest today is Gabi Bar, co-founder and executive vice president of TCM, Technology Commerce Management. TCM delivers the e-commerce aggregator industry's first predictive, AI-driven e-commerce performance optimization. Based in 2016 in Israel, TCM now operates e-commerce businesses on Amazon, Shopify, eBay, Walmart, Wayfair, WooCommerce, and more. Gabi, welcome and thank you for joining us today on the Buy Box Experts podcast.
Thank you for having me, James.
I want to start by asking you about all these private label businesses on Amazon. Obviously, a lot of interest right now in companies looking to invest in these firms. And yet these private label businesses have been around since the start of the Amazon marketplace. Why do you think all of a sudden there's so much interest now in these private label brands?
I think that we need to go back to the private label by itself. If we look at a company you probably have heard of, just a small name called Anchor, was the first private label business on Amazon.
Mm-hmm.
I think they're publicly traded now on the Chinese Stock Exchange. Traded, I think, last I've seen about $68 billion. But if you look at the evolution of the FBA businesses, you can see there was the notion that a business cannot be migrated into a different owner. That was the caution by all the FBA business owners that I've seen that the Amazon terms of services is being terrified of any movement that, if you just change one thing, you'll be blocked. And so there was not even the concept of, I can either sell my business or transfer it otherwise. A couple of years back, but I think when we started as a service provider. And as we looked into the TOS and we kind of examined it further, we saw that there's really an option of transferring the ownership of the business, and we decided to give it a try. But it was not until, I guess I have to give it to Tracio. I mean, give something to my really worthy rivals, Tracio, as when they started really launching their capital injection, and it's been all over the media, then the aggregation businesses started picking up. Because in one end, business owners now realize that they can transfer ownership. On the other, there's capital injection coming from a lot of places. And I mean, if you look at let's say 4 years ago, maybe 5 years ago, I think 101 e-commerce business was at the same time we started.
Yes.
He had to really sell out the business, not because it wasn't doing great, because with the lack of capital, the investment community couldn't really figure out and understand the FBA business and how can it be an investment vehicle. And again, I have to hand it to Tracio that really opened up the investment community. And since then, it's been a flood. It was capital all over $4.5 billion of capital being raised in the last 2 years, even 1.5 years. So I guess all of this combining with, with the understanding that this is a really good business, because you're buying a profitable business to begin with. You're not buying a distressed asset, you're buying a profitable business. And all of this combined together then really puts into aggregators where there's something here. There's something that I want to take advantage of, and that becomes a new disruption in the market. So
well, what do you think is going to happen? What do you think is going to happen in the next couple of years as more and more investors pile in? I don't think a week goes by where I don't hear about or get a call from someone saying, "Hey, I just raised $50 million."
You're right. You're right about it, James. I actually had a call today, surprisingly, from an aggregator in India.
Okay.
In India, predominantly aggregation of business, e-commerce business in India. This is it's a growing market, but you have to understand how the India market is operating. But you're absolutely right. There's more and more money being poured in. But this is on one end. On the other end, I've read somewhere that over 140 million online businesses have popped out during 2020 alone. So there's so much traction on the business and the private label side, and there's money on the other side, which also affect the valuation of the businesses and the multipliers.
Right.
There's some bidding wars, and that's where our technology comes in handy. But if we look at the overall market, I think there's room at least for a couple more years, and when it will be even out as far as the multipliers and really the businesses. But it also depends on how the market grows by itself. I think the market grows at a rate that obviously COVID is really give it a push up rather quickly. So I believe that we'll see it maybe in 5 years. We'll be able to see some even out on the chart, but it will grow most definitely.
So let me ask you about your experience. Before you founded this company, you had been working with e-commerce brands already, and you've now managed over 130 e-commerce brands. As an investor and an operator, what has drawn you to this space, and what are the kinds of issues that have surprised you the most about what you see going on here among these types of entrepreneurs?
You have to, as far as TCM goes, TCM is a tech-first company. So we've built the tech around the businesses and not the other way around. So we have applied we understand that this is a game of big data.
Yep.
And a game of big data has to apply machine learning and deep learning. And most aggregators out there are relying on Amazon, which is a tech business by itself. But when it comes to branching out, it becomes a little bit more difficult. So really understanding this business, and when we understood that there's so much data on one hand, when we first built a business, for so much data and so little utilization of the data, that's what really drawn us to this business. So in order to compile, you can have a lot of data, but it could stick and stay in the servers, and you won't be able to do anything. You won't be able to mitigate any risks or change business disruption without applying machine learning. So we saw that as an opportunity to draw data, apply our machine learning, able to really optimize businesses, and that's what really drawn to us. And that, on top of it, take the private label sector, which in 4 or 5 years ago we were dealing with brands as well, super brands, not only private label. But we realized that with private label, there's the scalability, the option to really scale up rather quickly, as opposed to brands, which you're just a mediator. You're working on a tight margins. Yes. And when you build a brand and you really can take it and use data for that, you can really leverage the data for the brands. And that's what really got us so enthusiastic about it. And we were able to use our machine learning to apply it to the most exciting space I see.
As you've started to acquire brands, you're interacting with these entrepreneurs that have started these businesses for various reasons. What are some of the biggest surprises you've had in terms of the types of motivations or the types of ways that these entrepreneurs think about this opportunity?
I think that as far as understanding what this business is all about, and the fact that I've come across businesses that have sold, they've primarily build a business for exit, but most businesses, most entrepreneurs have built this business for value based. They've really realized that they really want to bring a value to consumers. And that was really, I was a bit surprised when I was approached by businesses that we have found some metrics that really enable us to scale up the business and look at it like 10 years from now, not just on a short-term basis. That's really kind of puzzled me, because these are mainly entrepreneurs that usually within the 30s, maybe 40s, something like that. We had a business that we bought in Australia, was ran by two 50-year-old, a couple. So mostly it was like 30, 26, 25-year-old entrepreneurs. And having this notion that this business is really a lot more than just exit out, that really surprised me. And I mean, I have to hand out these entrepreneurs, but nowadays I feel that it's kind of going the wrong way. Because I do speak to a lot of entrepreneurs. We have about 150 to 200 businesses running through our machine on a given day.
Yes.
And a lot of them are just looking for exit out. And they're not looking to bring out the value of the products or customer-based valuations.
So let me ask you, with the software and the insights that you derive from your software, how do you think about the process of evaluating all these companies that are out there? I mean, I'm sure you've got your secret sauce, but there's lots of data that one can look at. You can filter through a lot of products quickly. There are both companies coming to you and companies that haven't yet come to you because you're going to have to go to them. How do you think about this whole process of being able to boil the ocean down to a handful of specific metrics or KPIs that you think are going to drive identifying successful brands?
We take a different approach to the entire evaluation process. Obviously, there are the online brokers that do the preliminary diligence on each business, and some aggregators and even buyers will rely on this data and might compile some data. But you're right, there's so much data that is driven from so many different sources that you can easily get lost in the pile of data. Yep. So that's what we apply. When we're sending our crawlers and our APIs to really drive the data, we are able to really identify hidden gems. We are able to see them even before they're into understanding that they want to sell out, or they've reached their peak into maturity. So on one end, we're able to get them ahead of time. And on the other side, based on the data we're driving, we're able to depict certain elements that have the ability to understand the valuation based on these parameters, not based on the financials. We don't even care about the financial. Our machines, when we look at the business, we send out bids automatically to Alibaba and other suppliers in order to understand the cost of the goods before we even approach the seller. Oh, wow. So we understand what's the ROI process. And once we do, if it's sufficient enough, then we're able to drive them back to us and say, okay, we're ready to explore it further. Then we hook up to their system, either via API or through callers, and drive data. And based on the parameters, we're able to get the actual price tag of the business, which is it could be completely different than what the owner or other aggregators would have seen. We've seen major discrepancies from aggregators as opposed to evaluating businesses as opposed to the price we have given it. And we've seen businesses being acquired at a higher multiplier and a much overpriced than what it is to what we were willing to, what our machine was, was given it, what the score was given by our machine. So it's a data-driven business, and if you don't apply data machine, it's going to be very hard to progress.
How do you get brands to want to agree to let you, as you say, hook up to your system so that you can run the data through the system? How are you able to do that? Because quite frankly, that's the inner workings of the business. And once you show people that.
You're right about that. But obviously, there's got to be a mutual understanding and a mutual benefit for both sides. Yep. One wants to sell, one wants to buy. So if you run it both together, there's a mutual mutually beneficial avenue, then obviously we get an access to via API to the data of the seller. So, but in some cases, even beforehand, before we speak to sellers, we're able to crawl. We use scrapers to get the data. So even though it's not 100% in accuracy, but it gives us a certain understanding of the value beforehand. So, but if you are a seller and you're interested in selling the business, there's really no reason why you're not going to be able to provide us with the data directly instead of us asking for the reports and like other aggregators would do.
When I think about some of the things that we're seeing here in the US, a lot of these investors, when they first get started, they're going through the FBA brokers. They're talking to brokers and saying, show me what you've got available. And that's fine for getting started and kind of understanding what might be out there if you don't have the back-end technology to go and find all these firms. But I'm curious on your take, how do you think about brokers today and where they fit into the ecosystem?
I think that they definitely have room for continuous business. We've seen, if you look at Empire Flippers, they've grown rapidly since 2019 on a year-to-year basis based on their multipliers, their profitable businesses. Over here, we have Fortinet. I think they were on your show, Michal and Yael. Mm-hmm. So there's definitely room for brokers because there's so much traction coming in. And eventually, when you sell out a business, you either do it by yourself or you apply brokers. It's like investment brokers or investment bankers that you utilize for either raising capital or selling your business for an M&A purposes. So I definitely see room for that. It will eventually be depend on your ability to either sell the business or buy or have them broker a deal. If you're not going to be good at it, then you're definitely not going to succeed. But that's true for any other industry, not necessarily this one. But there's room for the brokers. We use them quite often, even though the fact that we're getting the data by ourselves. Right. We're happy to get more data from the brokers, so we use Empires and Flippa and Latonas and others as well. So they definitely have the traction that will feed our system as far as data. This is really important to us as far as the data. So we're able to get even from that the data to our machines. So I do see them growing, continue growing.
To talk to me a little bit about what you would like to see more of these brands do before they go to market. So you're approaching companies that may not realize that you're interested in them. You also have companies that are approaching, looking for prospective buyers. At the end of the day, some are better prepared than others. When you think of the experiences you've had working with companies that you may or may not have acquired, tell me more about what you wish they did a better job of doing before going to market.
I think that that's the $1 million question. It's really, we see so many businesses and that they're not ready for acquisition, and either their main focus was just getting something that so they can exit out, try to get the cash quickly, or selling early stages or even in a later stage. So I think that every business, first and foremost, have to look at the business and the products that is presenting and the products that is selling from a customer point of view. If you build your business from a why perspective, what is the product? What is it comes to serve? Look at it not from how much money I want to make. What is the value that I'm able to drive to my customers? And look at my customers being the first and foremost before I'm looking at the capital that I'm able to drive from the business. I think that's the golden rule of building an e-commerce business. Then look at the inventory prospects. I mean, we've seen businesses that ran out of inventory so many times throughout the year. So an inventory planning that goes into the third issue of a cash flow. And inventory planning is a major issue when it comes to running the business, because not only if you run out of inventory, not only you're out of inventory to sell, you've been affected negatively on the Amazon score. So you're going down twice. So
Yeah.
Control your inventory, control your cash flow, save your expenditure, run a very, very tight ship. Even if you have the full cash on your hand, write a tight ship and get the business to where have a business plan ready and intact. And so apply as many tactics as you can. And then when you reach a certain maturity, then start scouting. When you start scouting the aggregators, then you'll get the reciprocation from the market. You'll see what an aggregator says, well, you're not ready there. Here's what you need to do. And we just opened an incubator process, an incubator in TCM, where we really open a free service to startups and e-commerce startups that are able to apply, and we'll help them really grow to a place where they could be either ready for acquisition or even grow the business by their own. We understood that there is a certain, since there's so many entrepreneurs in this business, that there's a lack of expertise, lack of technology, the lack of capital. There's a lot of lacking in this running the business. So we offered a service that help them come in, apply, and if they fit into our incubator, we will help them grow the business. Obviously, if they want to sell, we'll be there, to catch them if they want. But This is not a mandate whether to come and join our incubator process. We've talked to Yardline and Clearbank about providing the capital for these businesses, because we've seen that most of these businesses lack the guidance. They really have the drive to succeed, but lack the guidance to get to a maturity process where they can really get into an aggregation. That's why there's so little of good businesses that all of the aggregators will fight over them, but there's a lot of them that, one or two will pick, but you have to find the hidden gem.
So let me ask you, Gabi, when you look at brands to buy, what kinds of indicators do you look for to help give you a sense of the future growth opportunities within this brand? You talked about the financials are not necessarily as important. You've got your data. What can you share with us around what you look at that gets you excited about future growth?
We look at the trajectories, basically, the growth trajectories. But obviously, if let's say it's a one platform, so one marketplace, one region, US, Amazon alone, obviously there's a major growth trajectories. But if it's a business that is spread over the world, we need to look at a product from a product point of view. Is this product or the scalability, the options of taking one product and scale it out? So there's a lot of variance. There's a lot of variables that we need to apply. But in most cases, first and foremost, we look at the organic. Are we able to improve the images? Are we able to improve the text? Are we able to improve to set a certain listing options, maybe add video? Is this by itself will grow the business? Once we're done with that, then we look at the advertising, at the paid advertising. Is it just Amazon? Is it off Amazon traffic? And if yes, what's the ratio? And so forth. And then we look at the product scale. I mean, how many SKUs? I mean, is these SKUs are suitable for Europe, Australia, Singapore, Japan? What's the level of proficiency of these SKUs? And then we look at geographical and obviously marketplace. And our data really, we drive most of the data from Shopify or the brand, what we call the brand owner website. Because if you have a brand owner, then we're able to do data mining, which we're unable to do on Amazon. Amazon is really, there's a certain limitation to Amazon by itself as far as data driven. So data mining is where we get the most data from off Amazon. So if there's a brand that is selling to a certain degree off Amazon, then we apply a lot of our data-driven data mining from that part, which then we're able to learn a lot more about the business from a customer point of view. So these are the mainly 5. There's about 120 different parameters. I'm not going to share them here.
Of course not.
It would take us about 2 hours just to go
Yeah.
one by one. But these are 5 main ones that we're looking at.
So let me ask you, Gabi, with so many different investors in this space right now, talk to me about how you see your firm, TCM Digital, being differentiated from everyone else. You've obviously talked about technology, but are there other aspects that you see yourself as being able to tell a brand very quickly, we do these things this way, and that makes us different?
I think that the key element is our super brain tech. This is where we have a suite of technology, both on the post-acquisition as well as the pre-acquisition that we apply. We have a big data influencer system that actually drives the traffic from an influencer point of view. So I would have to say tech is really the main differentiating process. But there's also a certain really DNA of the company that's built over the years, a certain belief system that we've built here. It's got to do with ethics. It's got to do with looking at the customers first and foremost. We won't buy businesses that is not doesn't provide or doesn't improve quality of life. It has to improve quality of life. Every product that we sell, we look at it in a point where this product is improving quality of life for our customers. So we view the customers as really is our main objective, not necessarily the products. And we do take some businesses that are really underperforming, understanding that there's really growth potential, but they have great products. We just recently bought a business with a sustainable products that really was a small business. We usually don't engage with less than $1 million businesses, but it's like 500,000.
Okay.
But we love the product. We fell in love with the products, and the customers love it. It's like we were willing to pay the premium even for this business. So I guess the belief system with the ethics of really understanding what this business is all about, what is this industry, never lose touch with your customers. That's where we apply other than the tech. The tech is there. I mean, we can't avoid it, but it's really a lot more than, the staff. We have about 170 staff members. They're all working within a belief system that we have applied and we have built over the years. Now we teach it to disabilities and youth at risk. We do a lot of this belief system and we apply it to some of our outside the company, even our staff members.
So let me ask, Gabi, your stated mission on your website is our company's mission is to share the digital wealth.
Right.
Tell me more what you mean by that.
I think that really applied from an investor point of view is really, when we first started, we operated as some sort of a fintech company. We identify these businesses, we invite anyone to come in, invest in these businesses, we will run this business and share the digital wealth with them. But as we grow, as we evolved, we understood that sharing the digital wealth is really a lot more than just for an asset to asset basis. So we started getting investors in. We look at the clients. We're still working on that, to be completely honest with you. That was really on the fintech side, but right now we're driven by the quality of life and really looking into improve the quality of life. So I would have to say we combine them both together. On one end, we are looking in obviously to really share the digital wealth, because most investors, talking about the small investor, I'm not talking about the hedge funds or the equity funds that that's their business. I'm talking about the small-time investors that have seen their growth trajectories in the e-commerce and never had the chance to tap in. Either they buy a business or they need to rely on someone else. So they come to us and they put $100,000, $200,000, as an investment, and we get their money, work for them. So that's the share the digital wealth. But nowadays we really focus on what products we're selling, not just sharing the wealth that we're making.
So Gabi, let me ask you, should private label brands be exiting now, or should they be thinking about waiting longer before they sell? Obviously there's a lot of, it depends, but for a lot of these private label brands, there's a pot of gold waiting for them right now. They see it. All these people calling on them saying, I want to buy your business. So how do you help brands think through when the right time is to sell?
I think that goes to what I said earlier, that, it's the maturity process. And, you have to, as a business owner, there's a lot of opportunities that, sometimes will be good, sometimes will be not as good. Is really understanding where is your peak level. If you reach your peak, obviously you might be on a downslope. If you're on the way, then you might be not as ready as you should. So knowing where to pick is really the $1 million question. But I think that it all boils down to when you've reached, as an entrepreneur, you've reached your capacity as far as scalability. You need more capital to scale. You need more inventory to scale. You need more staff members to scale. So when it comes to really bumping up your resources, and now you start piling up some loans, some SBA loans, and so forth. Now you're getting into a point where you're now, instead of running the business, you're now thinking how you can get the finance in order to run the business. That's where you need to stop and say, okay, I think it's time for me to look at exit out, because I have a good business, it's profitable, but I'm scaling it up to a point where I need to really scale up my resources and really branch out, and to a point where I might need a bigger office. That's where you need to stop and look and getting ready to sell the business. I've seen both ends. Sometimes that was too late, sometimes too early. Those who are too early, we give them the pointers to really continue doing something that will work for them. We obviously consult them, and we open the door. We keep the door open for them if they want to come back. But obviously, it's never easy to sell a baby. If you have your baby, sell it, and now you have to sell it back in the market. But sometimes it's a necessity that if you don't do it, then you might lose your business entirely.
So let me ask you, what do you think you're going to need to do with your business to continue to be successful in the long run?
This is for aggregators. The funny thing is that it's all about capital. The more capital, the more business you're able to acquire, because we have the tech and we obviously have the SOPs, and we have the system in place. So the more capital we raise, the more business we're able to acquire. But if you look at it, if I'm looking at it, really having the foresight to see where the market is heading, there will be some consolidation as far as aggregators. We might get an offer. We already did get an offer to either be acquired or partner with another aggregator. We will see some consolidation, and we will see some dropout that will happen, because the capital will dry out at a certain point. Because this is a capital-hungry business. There's businesses where I have one of my board members call me a deal junkie. I keep on piling on the deals. We just recently acquired 3 new businesses. So it's always about capital. Until you flip it around where you're able to really acquire based on your workflow capital, that will take some time. So obviously for us is continuing growing. It's definitely within our yearly plan. But offers might come in, and we might say, as a business, as another entrepreneurs might say, it's time for me to either sell or partner.
Let me wrap up our conversation today. I want to ask you about some of the favorite software tools or companies that you've worked with that have helped you build your business to where it's at today.
I think that it's. I'll be shooting myself in the foot by saying that we did use some third-party software, because we're obviously using our own AI and big data systems. We have our own dashboards, and we have developed, and actually some of them will be offered as a SaaS service throughout the year. But, like any other aggregators or any other e-commerce business, we've used Jungle Scout, and we've used Seller Legend and others.
Yes.
It's like these players have been out there, and I think Jungle Scout, 3 years now? I think 3 or maybe 4 years. They've been in the business. They have a good product. They've just acquired a PPC software as well. Even though we have our own teams, we have our own PPC team, our logistics, we have our own software, the proprietary software that we've put together. But again, any good software that is out there, we usually give it a try. If it's good, we apply it.
That's great. Well, Gabi, I want to thank you for joining us today on the BuyBox Experts podcast. For those of you interested in learning more about the technology commerce management company, please visit tcmdigital.com. Join us again next time on the BuyBox Experts podcast. Today's episode is brought to you by Getida. Getida is a global leader in Amazon FBA auditing and reimbursements. Getida analyzes your Amazon data, reconciles your FBA inventory, and files claims for reimbursements on your behalf. No obligations, no hidden fees, just Getida recovering your money. Getida helps you get your money back into your pockets so you can focus on investing in more inventory and growing your business. To learn more, check out Getida.com. That's GETIDA.com.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.